Financial literacy. Financial literacy is the skills and knowledge that an individual possesses to be able to manage his or her financial resources effectively. For example, a financial literate person knows that her spendings should not be greater than his or her own money. This means that if you are a student and you are given an allowance of 100 pesos a day, then your spendings should not be over 100 pesos daily. Because if you do, then you will be in debt or you will end up having no more money left.
Importance of financial literacy. First, it helps us understand the value of money so we can handle our finances better. Being financially literate will teach us the importance of budgeting and saving. We won't just waste our money for very expensive gadgets, clothes, cars, bags, shoes, and other things we shouldn't really need. We can better understand between our wants and needs and can prioritize things according to their essence in our daily life. Second, it saves us from acquiring too much debt. Acquiring too much debt can put us in deep trouble. If we are financially literate, we can determine how much loan we can afford to pay, especially if we have bills for insurances. Third, it allows us to impart our knowledge on financial literacy to the young generation. To be financially literate will help us secure the future of the next generation. We can teach them how to budget and save to prepare for years ahead. We can also realize even at their young age how their parents work hard to provide for all their needs. Helping them become aware of the importance of financial literacy will likewise teach them discipline and respect for their parents. This will also train them to understand that eventually they should be financially independent, they will be more responsible and street smart. So, lastly is financial literacy help us prepare better during times of emergency. So we encounter moments of emergency wherein we need to cash or have amount of money to survive or overcome our monetary and emotional crisis. In times like this, being financially literate will save us the trouble of borrowing money that will just bring us more problems.
I'm going to share with you what are the tips that you can follow in order for you to spend your money wisely. So, whether we like it or not, part of our lives is that we need to be understood that we all need money to survive. Now, the first tips, know how much you have to spend. First of all, when it comes to how to spend your money wisely, knowing how much you have spent is one of the most important things. The second tips, spend your money on things that will benefit you in the long terms. The next thing you can do is to make sure that you only buy things that are worth your money. You should only buy things that will benefit you or help you to earn more, because sometimes people end up buying stuff for several hundred thousands but then never use these items again, and that is just a huge loss of money. Next tips, spend your money on necessities first. The next things to think is about what you are buying, because sometimes people spend their money on things that they think it will bring them happiness in life. But mind you, be smart on what you buy and where. Be sure always that you cover your basic needs first, then focus on saving accounts. Now you can start budgeting for entertainment and for things that you wanted to have. The next tips will be spend your money doing good deeds and for charity. Sometimes spending money for ourselves becomes too easy. As a result, we start feeling miserable in life because we are just motivated by our own personal interest at all times. So if we will just take time to think about others and do something for them, we will see and we will realize that doing good deeds is a lot more rewarding than the other things. The next tip is resist the urge to spend money on unnecessary things or goods and services. We should also make sure that we don't spend money on unnecessary things because sometimes we get caught up in the moment and ended up on buying things that we don't need. That is why money management is the key, and it is very important also to be always prepared when going shopping because we might not know when an opportunity to buy this or that comes along, okay? The last tip is prioritize spending money on things that we truly value. The last thing we can do is to make sure that we know when and where to spend our money wisely. We should avoid buying things that make us feel unhappy and dissatisfied with ourselves. So that will be all the tips that I can suggest for you for the success of handling and spending your money wisely. So it is just all about understanding your priorities and how much money you need to spend on the things that matter. So by mastering these skills, you will be able to live more enjoyable life. And why not take a step back and rethinking on how can you improve your budgeting skills and sense.
So now let us tackle about financial statements. When we say financial statements, it refers to those written records that convey information about the business activities and the financial performance of a company, such as the balance sheet, income statement, and the cash flow statements. There are 10 elements of financial statements. The first is assets. Assets are the property or legal rights owned by a business to which monetary value can be attached. In other words, it is an item of economic value that is expected to yield a benefit in the future. There are 4 classifications of assets. First is tangible assets, which refers to those assets that can be seen and can be touched, like for example, machinery, furniture, and buildings. The second one is intangible assets, which refers to those assets do not have physical existence, like for example, goodwill, trademarks, patents, or rights. And the third one is fixed assets, which refers to those assets that are put to use for a longer period. And a good example of this is land property. And the fourth one is current assets, which refers to those assets that are readily convertible into cash, like for example, cash in bank and short-term investments. Next is liabilities. A liability is a present obligation of the enterprise arising from past events, the settlements of which is expected to result in an outflow from the enterprise of resources embodying economic benefits. There are 2 categories of liability: current liabilities and non-current liabilities. Current liabilities refers to those payments which are payable during the current financial year, like for example, accounts payable, short-term debt, and even income taxes. On the other hand, non-current liabilities refers to those payments which are due for payment over a long period of time, like for example, long-term loans, and even warranties covering more than 1 year fall under these liabilities. Next is equity. Equity represents an ownership interest in a firm in the form of stock. In other words, equity is mainly a residual amount adjusted by the assets against liabilities. So assets minus liabilities. Next is investment by owners. It depicts an increase in equity resulting from the transfer of resources in exchange for an ownership interest.
It basically describes an owner's contribution to the firm. Next is distribution to owners. It represents a decrease in equity which results from transfer to owners. It determines the owner's withdrawal from the ownership interest of the firm. Example of this is cash or interest dividend paid by a corporation to its shareholders. Next is revenue. Revenue is the income that a business earns from its normal business activities. It is an inflow of assets which results in an increase in owner's equity. An example of this is the exchange goods and services for money consideration. Next is gains. Gain is an increase in owner's equity from peripheral transactions which are irregular and non-current in nature. Next is expenses. Expenses are the gross outflows incurred by the business enterprise for generating revenues. This type of element charged to the profit-loss account. Next, losses. Loss is a decrease in owner's equity from peripheral transactions which are irregular and non-recurrent in nature. Like for example, the sale of a long-lived asset for an amount that is less than the asset's book value. Next is comprehensive income. Comprehensive income is the change in equity of a business enterprise from transactions from non-owner sources. It includes all changes in equity of an enterprise other than those resulting from investments by owners and distributions to owners.
As an educator, how will you teach your students to become more financially literate? As an educator, I will teach my students to become financially literate by giving them financial situations that are simple and easy to understand, and give solutions that they can conveniently comprehend. And in order for the students to be financially literate, they need to learn how to save their money and spend it wisely. And also, reduction of expenses is one of the factors in becoming a financially literate.
As a 21st century educator, how will you teach your learners a flexible, innovative, reflective, and creative way of learning in terms of financial management? So, as a teacher, I can teach my students to be financially literate in a form of creative and innovative way of learning through games. So, it could be Credit Clash, Count with Coins, and Cash Puzzler. These are some of the games that could be used for elementary learners to learn and at the same time have fun in class. And for high school students, I could teach them how to save their money. One way is to encourage them to save their money at the bank. So personally speaking, I had this experience way back high school that I was able to save my money at the AIM Co-op. And I can say that that was a good experience and strategy because you get to hit two birds in one stone. You get to save your money and at the same time have its interest rate. And so, encouraging my students to save their money at the banks is a good way of managing their finances or their money.